The daily chart has an II pattern and has a pair of inside bars. Both are dojis, and those are weak signal bars for a breakout. An II pattern is a breakout pattern, so typically traders look to sell below the bottom or buy above the top looking for a trend, but that depends on context. And here we're in the middle of a 3-month trading range. It's not breakout mode, so probably trading range mode, which means probably more buyers below yesterday's low and more sellers above yesterday's high. So rather than selling with a stop below yesterday's low looking for a trend, probably the best the bears can get is a day or two down, and then we'll go up for a day or two because we're in our trading range. And you have to be thinking about opposite behavior, like yesterday, trading range day. So traders are looking to buy low instead of sell low, and they're looking to sell high instead of buy high. They're betting that breakouts will reverse rather than lead to a trend. Most trading range breakout attempts fail, and therefore probably we're not going to fall much below yesterday's low. Can you buy with a limit order at yesterday's low? Yeah, as you know, the first bar or two of the day often give information about what the day will be like, and traders want to see if limit order traders can make money on the first bar or on the second or third bar. And right now we're breaking below yesterday's low, and therefore you know there are bulls who bought yesterday's low, and they'll buy more 1 point lower, 2 points lower, betting that the trading range will continue and that the breakout will fail. And what I need to know is, will those bulls make money? And if they do make money, that increases the chances that today would be either a trading range day or possibly a bull trend day. Here we are 4 minutes into the bar, and we have a fairly big bear bar. That alone reduces the chances that today will be a big bull trend day. If you just look back at the past, couple of months, how many big bull trend days began with a big bear bar for the first bar? Usually, if you're going to get a bull trend day, the first bar is either a bull bar or a neutral bar, and the opposite is true with bear trend days. And therefore, this is giving us information. Now, bulls who bought the 37 low placed limit orders to buy more 1 point lower. It fell 1 point. Most of those limit orders did not get filled. So a lot of the bulls who bought the 37 low, I don't know if I've been saying 37, 38, 37 low, yesterday's low. A lot of those bulls are getting out break even. They wanted the market to go a tick below 37 and then go up enough for a scalp. It did not. Alternatively, they wanted it to go down a point or two more so they could buy more lower, and it had to get 5 ticks below yesterday's low for them to add on. It got 4 ticks below, and therefore a lot of those limit order bulls are selling. They're selling out around break even. They were unable to add on, and one is a disappointing bar, and they are unwilling to hold, betting that it's going to go up 5 ticks above the low of yesterday. What do I think? Look at the screen. Right? I assume that traders buying below things will make money, so I think the traders who bought the 37 low probably will make money. Best choice right here. I think wait for more information. Daily chart, II, and here's the range. We're pretty much in the middle of the range. This range has gone on for at least a couple of months. Today's a Friday, so weekly support and resistance is important. And the two most important prices on the weekly chart right now are this week's open. Will this week have a bull body or a bear body? And then this week's low and this week's high. Will it be a trend bar? Will it close on its low? Will it close on its high? Monthly chart, too early to have any meaning, but 11 months without a pullback, pretty unusual. Even back in, I don't know if I go back to this chart does not go back to 1995 when we had that once in a lifetime bull trend. I don't remember. Let me put up the cash index. This was the single strongest bull trend in my lifetime. And the reason I'm bringing it up is the microchannel. You can see the microchannel lasted a lot of bars. It began here, December, and the first pullback is here. So it went about 13 bars without a pullback. And that is the strongest the market has ever been in my 30 years of trading. And here we're at 11 bars without a pullback, which is surprising because this is occurring very late in a bull trend. And 94, 95 was at the very start of a bull trend. And you'd expect a lot of strength early. You do not expect a lot of strength late. When you get a lot of strength late, it's more likely an exhaustive end of the trend than the conversion of a bull trend into an even stronger bull trend. All right, so possible low of the day. Here we have a double top, a break below the neckline, and instead of selling off strongly, we're getting a reversal. Remember I said 37 low bulls, some would buy and buy more lower. It has to go up 5 ticks for them to make money, and so far it's up 4 ticks. If it's a decent buy signal bar, what do you think? We have a pair of inside bars in the middle of a tight trading range. You got to be thinking that maybe we'll reverse up from below yesterday's low and get back above yesterday's high, and today will become an outside day. It might. Yesterday's range was fairly small, and yesterday early on I said the reversal down from right below yesterday's high could lead to an inside day, which it did. Now we're breaking below yesterday's low, and we're not breaking strongly below it, and therefore the breakout might fail and reverse up to above yesterday's high, and then we could get another, possibly a doji day, but we could get a small outside day after a pair of inside days. Right now, just look how it's just sitting there. It's not bouncing around not going up, down, up, down, up, down. It's going up, it stops. It goes down a tick, it stops. So not much energy. We have a big gap down and then a bear bar, but then the next bar is a bull bar. So not trending behavior. 25% chance the reversal up will be the low of the day. Higher probability, you wait to see if we start to get consecutive bull trend bars. Now, who thinks today is going to be a strong trend day, up or down? It probably will not. Look at yesterday, right? And therefore, a lot of bulls are hesitant to buy too high. However, if we do get consecutive good bull bars, the market will be always in long, and traders will start thinking that we'll trade above yesterday's high and form an outside day. So we traded below yesterday's low, and this is a failed breakout. It's a buy signal for a possible low of the day. 25% chance it's the low of the day. For the bears, 2 is a pullback from the break below yesterday's low, but it's similar to 8 yesterday. When you have a lot of trading range price action, and then you get a low one sell signal bar like 8 yesterday, and it has a bull body, that's a very low probability sell, probably buyers below. And 2 is a pullback, a low one sell. We have a gap down and then a pullback on 2, but we have a pretty good bull body. That is a low probability sell signal bar, so probably buyers below 2. Some traders like to wait for a second entry buy. If it breaks below yesterday's low, they don't take the first reversal up. They wait for it to break again below yesterday's low, and then they look for a second reversal up. That is a higher probability buy. However, you don't always get it. Sometimes the market breaks below yesterday's low, reverses up, and then just keeps trending up all day. Not a good sell. We have 2 is an inside bar. 3 might be an inside bar as well. So it could be a small version of what's going on the daily chart. We have II here, might get an II here. Trading range, probably we're going up because we're down. And that's what happens. Whenever the market is down in a trading range, you expect it to go up. Whenever it's up, you expect it to go down. We're down, so chances are we'll go up at least a little. Is the probability high enough to buy with a stop above 2 for a scalp? I'm not confident that it is. If you use a wide stop and buy more below 1, then it probably is. But otherwise, it's not, I think, a good scalp. Globex chart, look at the past 6 hours. Just reversing every 2 or 3 bars. Bull, bear, bull, bear, bull, bear, bull, bear, bull, bear, right? Not trending price action. And buying with stops at the top of things when the market's in a trading range is I think, a bad strategy. Always in long, consecutive bull bars, but not strongly bullish. It's certainly an okay swing buy, but probability, once 3 went above 2, the probability was 25% chance this is the low of the day. Now that 3 has a bull close, it might be a 30% chance that this is the low of the day. $60-minute chart, 3 pushes down, 1, 2, 3. You can call it a tight range. You can call it a triangle. I know it does not have a triangle shape because this low is below that low, but whenever you got a tight range with lower highs and or higher lows, it behaves like a triangle. So you can call it a triangle if you want. We had a big up, big down, big up move, and we're right in the middle of that. So this is, possibly a big triangle. Breakout mode. What do you do here? I think best choice is to wait. Whenever you look at a chart and there's something confusing about it, then you have to assume that we're not going to go all that far up or down. Stop order bulls need 1 more tick. They need 6 ticks above 2 to make their scalp, and therefore bears will sell 4 or 5 ticks above 2 to trap the bulls and force them to sell out. And that's exactly where we are here. A pullback from the break below yesterday's low. And this is what I was talking about the 5-tick trap. When it sits up there at 5 ticks, a lot of the bull scalpers start to get nervous and they sell out of their longs, hoping to get maybe a 1-tick or a 2-tick profit. It's still on the buy, failed breakout below yesterday's low. But bad situation for scalpers. It's still on the swing buy, and the stop for the bulls is still below 1. If they get stopped out and then the market reverses up a second time, that would be a second failed breakout below yesterday's low, and that would have a higher probability of a swing up. Right now we are on a swing up. We're always in long, but small bars, bad follow through, not yet a high probability market. It increases the chances that we'll probably have an early trading range for an hour or 2, and then decide the direction of the first swing. And it also increases the chances that today will be another trading range day like yesterday and the day before. Remember, there were bears who bet against this being the low of the day, and they bet against the scalpers, and they sold either the 2 high or 1 point above, and they made money. It fell back below the 2 high. So what does that tell you? Here the bulls have a good buy setup, failed breakout yesterday's low, a good buy signal bar, bar 2, yet the bears made money. And that tells you that there's something wrong with the buy setup. It should not be easy for bears to make money selling a good buy setup. Again, you have to assume today will be another trading range day, and so far we have trading range behavior. And if the market does something to convince me that it's going to be a trend day, then I'll start looking for swings. But right now, probably another trading range day, and the market is simply looking for either the high or low of the day. We don't know the direction of the first swing. Yesterday when the market opened near the prior day's high, I said, even though it's fairly neutral, the odds were slightly higher that will go down. And now we're opening near the prior day's low. Even though it's fairly neutral, the odds are we're going to try to go higher. We may have to get a second entry buy. Break below yesterday's low, reversed up. First entry buy led to the low of the day. This is what I always like to see. The market's below yesterday's low, reversed up, failed, reversed up a second time with a decent buy signal bar. And that's a higher probability buy. Even though we fell back below yesterday's low again, it's a reasonable thing. Reversed up from below yesterday's low, reversed up a second time. That is a higher probability buy. Again, even with that strong rally, the day remained a trading range day. Reversed up from below yesterday's low, reversed up a second time. We got to swing up. Reversed up from below yesterday's low, reversed up a second time. We got a reversal day. Prominent tails on all 5 bars, and all 5 bars overlap one another. So trading range open. Because we have 2 decent bull trend bars, I think we're always in long, but a lot of traders are waiting. So a lot of the bulls who bought above 2 are disappointed and they've exited. But chances are buyers below 4, buyers below 3, buyers below 2, buyers below 1. Although it does not look like a trend, we've had 5 bars and no pullback. No bar has traded below the low of the prior bar. That means there's some aggressiveness on the part of the bulls, and it increases the chances that there will be buyers at the low of the prior bar, the 5 low. Bears made money selling above 2. Will they sell above 5? I would not, because now we have 6 bars without a pullback. Even though we don't have much in terms of strong bulls, you have to be aware that the market might not be as two-sided as it appears. 6 bars without a pullback, 6 bars every low is at or above the low of the prior bar. So that's one of those stealthy types of buying pressure, where when you look at the chart, it does not look like any buying pressure. But then when you just look at the lows, you say, that's interesting. We have a small wedge bear flag down on 1, down on 5, trying to go down on 1, down on 4, and trying to go down on 6. But a 6-bar bull micro channel, even though a very weak bull channel, I think it's a low probability sell below 6. Probably buyers below 6, despite an opening reversal. We have a big gap down. We rallied to the moving average, and now we're trying to reverse back down. But 6-bar bull micro channel, I think probably buyers below. This is the open of the week. And because today's a Friday, it's a magnet. I'll just make it blue. And that's the open of the week. Gap down like today, 3 reversals down, 1, 2, 3. So a wedge opening reversal at the moving average. Wedge opening reversal at the moving average. Became the high of the day, but you can see we had pullbacks. We had a pullback here. This would be a second pullback. Today we do not have any pullbacks, and I think it makes it a lower probability sell below 6. Right now, probably buyers below 6. Can the bulls keep the gap open? 7 low, 4 high. If so, it increases the chances that today will be an outside day and go above yesterday's high, which means testing the open of the week. The gap is important, 4 high. Will the bulls be able to keep it open? If so, it increases the chances that we'll get back to the open of the week and possibly form an outside day. Bears have a problem. It's a 7-bar bull micro channel, and therefore the odds are buyers below 7. So it's a low probability short, even though it's a possible high of the day. Opening reversal down from the 5-minute moving average and the 60-minute moving average. But why do we have a 7-bar bull micro channel? When you get that, the odds are traders will buy the low of the prior bar. This bar and the next bar are important. Will it close on its high? Will it close far above the 60-minute moving average? Or will it reverse? And if it reverses, will it close the gap above the 4 high? If it's a weak bar, bad follow through after 6, if it closes the gap, it increases the chances that we will have a trading range open. However, 7-bar bull micro channel, most bears will want a second entry sell. They will not sell below 7 because they know there probably will be buyers at the 7 low or 1 point below it. Low probability short, even though possible high of the day. Wedge reversal at the 60-minute moving average. Similar to 15-16 yesterday, but a little bit different. That followed a reversal down from yesterday's high. This is now a reversal up from yesterday's low. And now we have a 7 or 8 bar bull micro channel. And therefore, I think always in long. We still have the gap 4 high, and therefore you have limit order bears who sold the 4 high, and they're selling more 1 or 2 points higher, hoping that the gap closes and that the trading range price action continues. Right now, I think the odds are we're going to get down to near the 4 high, but a lot of bears will wait for a second entry short, knowing that the odds are the first entry traders will buy below the low of the first bar. So this is similar, 6-7, similar to 15-16 yesterday, except that followed a reversal down from the prior day's high, and this is following a reversal up from yesterday's low. So that was following something bearish, and this is following something bullish. Now, what about buying with a limit order at the 8 low? Well, I mentioned yesterday that probably theoretically sellers above 8, but whenever there's a strong sell-off and a possibility of a reversal, and I have a good bull bar, I'm not going to be selling that 8 high. I'd rather look to buy. And this is the opposite. Let's say 8 is a good bear bar closing on its low. I will not buy the low, because when you get a breakout and a good bear bar, you often get a deep pullback. So I don't want to be buying too high. And same with here. Whenever you get a bear breakout and then a good bull bar, I don't want to be selling that high, because the market often pulls back a lot. Let's say it's a 1 tick bear body. Can you buy the 8 low? Well, I think you can buy closes, you can buy at the market, but I'm still not confident this will be a big bull trend. Although 6 and 7 are good bull bars, they're not especially big. Compare them to the big trend bars yesterday, 7 and 16. Both of these bull bars are smaller than those bars yesterday. So although it looks good and we're always in long, and right now I would say 50% chance we've seen the low of the day. I think a lot of traders will not buy below 8. We're barely poking above resistance, 5-minute, 60-minute moving averages, and the bars are not all that big. Again, as for selling below 8, it's an 8-bar bull micro channel. Even if 8 is a big bear bar closing on its low, the odds are bulls will buy either at the 8 low or a point or two below 8. So it's a low probability short. Any reversal down, even after an 8-bar bull micro channel, can be the high of the day. But I would not take that short, even for a swing trade. I would wait for a series of bear bars or a second entry short. The odds are just too high that there'll be buyers not far below. Remember that gap 4 high is important, and a lot of bears looked at the first 5 bars and decided that trading range price action, therefore selling above 5 made sense. And right now I do believe those bears will make money. I do believe it's going to fall below the 4 high and close the gap. But I also believe the market's always in long, and that traders will buy somewhere below 8, either at the 8 low or at the 4 high, or at any of the highs, the 1 high somewhere. Some buyers will probably come in somewhere in here. Probably a bull leg, and what will end up as a trading range. You can see testing the 5 high. Limit order bears need it to fall 1 tick. Remember, the bears who sold above 2 made money, and that makes bears willing to sell at the 4 high or 1 point higher. How many bear bars do bears need to conclude this is the high of the day? Well, my usual rule is if you have ordinary sized bars, you need 3 before traders are confident that a reversal is underway. Right now, I think we're going to drop below the 4 high. We may get all the way down to the 6 low or 4 low, 3 low. However, I think this is probably going to be a trading range open. You can see why buying at the 8 low was not a great situation. We had that big magnet at the 4 high, So if the market's going to fall below the 4 high, it does not make sense to buy at the 8 low because you know it's going to fall more. We have a buy climax 6-7, so the buy climax low 6 is a target as well. The bulls who bought the 8 low probably will make money, just like the bears who sold the 4 high made money. This is probably a bull leg in a trading range, and the market's right now deciding, is it going to enter a trading range now, or is it going to go higher and then become a trading range? All three moving averages flat and near one another and in the middle of the screen. So big magnet in the middle of the screen. Stop order bears need one more tick. Bulls are buying, scaling bulls are buying 1 point below 8, and they are trying to prevent the stop order bears from making money. Right now, we're testing the 5 high. I think we're going to fall a little bit lower, and therefore the stop order bears probably will make money. But I also think we're always in long, and that the best the bears probably get is a deep pullback to around the 6 low. Looks like limit order market, right? So 5 tick trap for the bears below 8, but not a good buy signal bar for the bulls. And the bulls who bought 1 point below 8 made money. Bulls who bought the 5 high, the 4 high made money. Stop order bulls, a lot of stop order bulls would not buy above 9, despite a high 1 and a 8-bar bull micro channel. Still always in long. Bulls have a high to buy above 10, but we have a big magnet 6 low, the bottom of the buy climax. What happens if we get below the 6 low? Probably buyers below. And can the bears sell here? Well, it's selling a high 2, and the market's always in long. Even though we have a magnet at the 6 low, I think the bears should be selling lower. We have 4 bars without a bull bar, but I still think more likely an early trading range. I would rather be looking to buy than sell. Limit order market. Traders selling above, buying below. Wedge, higher low. Now 3 pushes down, 9, 11, 13. Traders prefer stop entries, but this looks like it's going to be similar to yesterday, where most of the trading is limit orders. For the bulls, they have a higher low, testing around yesterday's low, and they have a wedge, but they also have 5 dojis here, and there's a magnet at the 6 low, and we did not quite get down to the 6 low. First bar of the day, a doji bar, prominent tail, small body, in the middle of a 15 bar tight range. Not a good looking stop entry buy setup. What do? Well, it's still always in long, but obviously another very quiet day. The 8 bar bull micro channel is important, and right now I would say, maybe 70% chance we've seen the low of the day. The bears are hoping 8 is the high of the day. Usually by bar 7, there's a 50-50 chance. There's a 50% chance you've seen either the low or high of the day. So by the close of bar 7, 50% chance this is the high, 50% chance this is, 50% chance either that's the high or this is the low. Slightly more likely that we've seen the low of the day, because I think we're still always in long. Bears now want a double top with a small parabolic wedge top, but 6 bars without a bear body. Low probability. Odds are always in long. Because the sell-off was relatively deep, the bulls might need a double bottom, so we may come back down to the 13 low to form a double bottom, and then try to get up to measured move around yesterday's high, open of the week. Still a very small limit order market. Pretty difficult to do much of anything. You get rare opportunities to buy below bars, and I'm less interested in selling the 14 high, because I think we're always in long. But to buy again, I need the market to come somewhere down here. or to break strongly to the upside. You buy on a stop, a breakout above the double top. I personally would not. I think it's a lot of trading range price action. Can you sell with a limit order, 17 high, betting on a failed breakout? It's probably okay to do that. I'm more interested in buying, but right now I want to buy lower. We're at the top of a weak rally. So right now I'm trapped out. I did not take the sell, although it's a reasonable sell. I'd rather buy lower. Bulls trying to get their breakout. A lot of traders don't want to be entering with stops. Now, what about a gap above 18? Will bears make money selling up there? It's a trading range day. It's a bull trend, but it's a trading range day. Probably the bears will make money selling the 18 high. I would rather wait for the market to go sideways a few bars before looking to sell. And for the bulls, it's a trading range day. There's a big magnet at yesterday's high. The day is trying to become outside up. We had an II coming into the day, but a pair of dojis, a bad signal bar, probably buyers below, sellers above, and still true, probably sellers above. So, we traded below yesterday's low and they bought. If we get above yesterday's high, they'll probably sell. As for placing a limit order to sell at yesterday's high, I would wait. Right now, I think the real issue is not so much yesterday's high, but the open of the week. Today's a Friday, and weekly chart right now has a bear body, and the bulls wanted to have a bull body. They want to get 3 consecutive bull bodies. I don't think it matters all that much. We're sideways for 6 or 7 weeks, and we have an inside bar, and if it has a bull body, it probably will have a small bull body, so it basically will be a doji. What do you do right here? Well, I think it's difficult to do anything at this instant. Obviously, we're always in long. And we have a series of targets above yesterday's close, yesterday's high, and the open of the week. We're probably going higher, whether or not we pull back first. Stop for the bulls. Right now, the most recent major higher low is 13. So if you're buying up here, stop is all the way down here, and you have to buy fairly small. Look at the screen. We had a big bear bar, reversal up, big bull bar, reversal down, bear up, right? So a lot of traders are hesitant to buy high, but chances are, even if they buy high, they'll be able to get out break even if the next bar or two is disappointing. So it's still okay to buy up here, but it just requires more work. For the bears, they can argue wedge 1, 2, 3, or failed breakout above a wedge. Second leg trap, 1 pullback 2, 1 pullback 2. I think with the magnets above, especially the open of the week, it's better to wait for a second entry short because the market's probably going to get pulled up there. There's still a lot of time left in the day, and obviously we could pull back down to the 18 buy climax low, 60-minute moving average. It's unlikely that this is going to be a strong bull trend day. We have a bull bar here, weak follow through, a pair of bull bars, not all that big, deep pullback, and a breakout up here. Probably more of a trending trading range day, so a lower range breakout for 2, 3 bars and then another range. Probably not going to go straight up all that far, and if we do get right to the open of the week, we'll probably pull back around yesterday's high and the open of the week. What about selling the close up here? Look at the open of 20, 1 tick below the close of 19, and that tells you that some traders hit sell the close, sell the market as soon as the bar closed. You have other traders placing a limit order to sell 1 tick below yesterday's close. I still think always in long. Bears want a second leg trap, leg 1, pullback leg 2, but even if they get it, probably buyers below. We reversed up from yesterday's low, and we're getting near yesterday's high, which is the next target. And on top of that, we have the open of the week magnet there as well. And that makes it likely that we've seen the low of the day. Usually by around bar 18, which we just had, there's a 90% chance that if we break above the first 18 bars, the market will not fall to the low of the day. So right now, there's a 90% chance the market's not going to fall to a new low. And that makes traders willing to buy pullbacks. Probably buyers below is similar to 8. We pulled back there 5 or 6 bars. The bears were hoping 5-tick trap. They're also, remember, you got bears who sold the 8 high and the 18 high. I think they will make money because that is a reasonable sell. However, I still think we're always in long, and I think whatever pullback we get will end up testing back up later. But sometimes when you get these deep pullbacks, it takes 10 or 20 bars to get back up here. By the close, deep pullback. It never got all the way back up there, but 20 or 30 bars later, it had a rally close to it. Deep pullback, took about 20 bars to get there. This is more like today. So, if you get a deep sell-off, it's probably going to get back up there. This is a version of a second leg trap. First leg up, a wedge, and then a breakout. And then a very deep reversal, but it still got back up there. Same thing here. Strong rally, deep pullback. About 20 bars later, it got back up to the high close. So this is, even if we do get a big collapse, probably buyers below, higher, low, and we get back up there by the end of the day. Remember, it's still really early in the day, and we're not even 1/3 through with the day. And therefore, the market could pull back very deeply. It could pull back below 18. It could pull back down to the 13 low, or even below. Stop order bears made money, right, on what they believed was a 2-leg trap, 1 pullback 2. You had limit order bears who sold the 17 high, 18 high, and they sold more below 20. And then we got back 1 tick below 18, and we got some buying here. What do? We're still always in long. Is it a big enough sell-off so that we'll probably get a couple legs down? A lot of traders want one more bar. So if 22 is also a bear bar, then a lot of bears will sell the bear close 22. They'll sell above 22. And a lot of the bulls will wait for at least a second leg down before buying. They'll buy with a limit order below bars. So if we go up here, they'll buy below here, 60-minute moving average, and below bars. So what do? Is it always in short? I still think it's going to be basically a trending trading range today. Lower range, middle range, upper range, some overlap. I think probably more buyers here than sellers. On these second leg traps, two legs down, 1 pullback 2, like this. 1 pullback 2, right, and sold off, and then enter the trading range. I think this is the best the bears will get. So, weak rally and a breakout. Not so, a little bit stronger rally and a breakout. And probably the best the bears get is a trading range. Here's a bear, leg 1, pullback 2. A very strong reversal up. Leg 1, pullback 2. This is similar to today. and it collapsed, but ended up in a trading range, and therefore traders buying even big bear bars feel confident that the market will either go up pretty soon and they'll make money, or if it goes lower, they can scale in and make money. So you buy that or buy that, although I would not buy that or that. Chances are we're going lower. And, this I might buy that close looking for a scalp up. Again, second leg trap, weak rally, and then a deep pullback. Got some follow through, but the market ended up sideways. So this is probably the most similar to today. 3 pushes up, 1, 2, 3, and then a breakout. 3 pushes up, 1, 2, 3, and then a breakout. And then a pullback, deep pullback, and then a trading range. Can you sell 23 high after 3 bear bars closing on their lows? Trading range is likely. So traders are going to be buying bear things like below bars and bear closes at support, 60-minute moving average, and they will sell above things. What about the buy the close bulls, 19? I still think we're probably going to get up to the open of the week. We may have to go sideways for an hour or two before we try to go up there. I still think it's always in long. I'd rather be long than short, but I am scalping. I've been only scalping today because the price action looks like a trading range price action. I'm not opposed to buying at the market, buying the 22 close, buying the 23 high, but I think this is enough of big up, big down to create big confusion, and the first reversal up here probably will find sellers somewhere above 23, and we'll have to get some kind of a double bottom, 23 and maybe 27, 28, and we may get a small second leg down, leg 1, pullback, leg 2. So I think that it's better to be buying lower or buying a double bottom. However, of the bar looking like that, a lot of bears will not sell the 23 high. I think we're going to go sideways here, so I think there probably are sellers not far above 23. A lot of days when you get second leg traps, you get them in both directions. So 1 pullback, 2, we're at support near the 18 low, near the 60-minute moving average. The bears are hoping for leg 1, leg 2. Leg 1, pullback, leg 2 takes us a little bit lower, but probably buyers 23 low, 1 point lower, buyers 18 low, 1 point lower, buyers 12 low. We may come all the way down to the 12 low. It's a trading range day. I think, as I said, 90% chance after bar 18 breakout, we're not going to get to a new low of the day. It's no longer 90%. The more we fall, the percentage drops. So 80%, 70%, but it's still, I think, 70% chance right now that we will not fall below the low of the day. Next magnet is this lower high. The higher low, the 13 low. I don't know that we'll get there. We have support, 60-minute moving average, 18 low, and probably buyers starting to scale in below bars. But, we're in the general buy zone, 23 low, 13 low, somewhere in here. And for the bears, are we always in short? Well, we got 3 bear bars here. We have 3 bear bars here. But I still think it's more likely that we're not going to fall to a new low of the day. And for the bears, I would rather be selling above bars, above 23, and not this low. Second leg trap, 2 legs down, but 3 consecutive bear bars, fairly tight bear channel, 6 decent bear bars. Probably the bulls will need a small double bottom here. Limit order bulls buying 23 low probably will make money. I think that the upside above 28 is limited and that we'll have to go sideways more. We're right around the 60-minute moving average, which has been kind of the center of the day. Here's the low of the day. Here's the high of the day, 60-minute moving average, a little bit above the midpoint. So I would not buy with a stop above 28. I think it's a limit order market. Bulls buying below 23, below 26, below 18, below anything, that below 13, stop down here. And for the bears, they know that we have magnets below, especially the 13 low. But, I personally don't want to sell low in a day that has a lot of trading range price action. So to me, I'm looking to buy, and I think we're probably going a little bit lower. Bears want either a channel, 3 pushes down, 1 pullback, 2 pullback, 3, or a double top bear flag 25. For me, it's still too low to sell. It's a trading range day. I think we're always in long, and I'd rather be buying below things. The 22 low, you can see the bulls right now have a 4-tick trap. They need one more tick to make a profit. I traded with a guy years ago, and instead of buying the 23 low, he would always place his limit order 1 tick below, because he knows that a lot of times it'll go up exactly 4 ticks. So instead of buying the 9 low, he'd buy 1 tick below. Instead of selling the 8 high, he would sell 1 tick above. My problem with that is a lot of times you end up missing trades that turn out to be good. Sometimes I do that, depending on circumstances. Yesterday I bought 1 tick below 17 instead of at the 17 low. But you take a risk that your limit order will not get filled. Probably too many buyers wanting to buy below 30, so we may simply go sideways. We have 3 pushes up here, but the wedge top failed. Now we have 3 pushes down if we get below 27, but probably buyers below. We're trying to get below the 18 low. Trading range day, the market usually falls below obvious support. 18 low, obvious support. So we should get down to the 18 low, probably fall below it. Might get all the way down to the 13 low. A lot of times you'll get a pullback that forms a double bottom like this. In the buy zone, 13 low and 18 low. What happens if it just keeps selling off? Well, then we get an endless pullback and we get a bear breakout into a bear trend. But more likely, this is going to remain a trading range day, and we're in the buy zone and we'll bounce here or soon. What about a stop entry buy for the wedge? I don't know. I would rather be buying 28 low or 18 low and or 1 point lower. Looks like we're going to get down to the 13 low. It's possible that we could break to a new low of the day, but even if we do, there probably will be buyers below the low of the day. This is probably going to be a trading range day. Still buy zone, right? Anywhere below 18 down to around 13 low. For stop entry bulls, it's consecutive bottoms. We tried to bottom here. We get a breakout. We have a small second leg down. So it's a high 4, high 1, high 2, and then high 3 never triggered, and high 4. I view it as consecutive bottom attempts. The market tried to bottom here. 22 strong enough for a second leg down. Well, we got it. 26. And the bulls tried to reverse. They failed. 30, 31 strong enough for a second leg down. Well, we got it. 33. Now the market's trying to reverse again. I think we're in the buy zone, but I think it's better to buy with limit orders. You got bulls buying the 28 low and 1 point lower, or simply buying 1 point lower. Bulls buying the 18 low and 1 point lower. The bulls who bought the 18 low, 1 point lower, are scalping out here. What about stop order bulls? 15-minute chart, big up, big down, big confusion, probably trading range. So we're probably going to go sideways here. This channel is very tight, and therefore it's unlikely that we're going to go straight up. We'll probably have to go sideways. We still have room to the 13 low, so we still might have to get there. What about selling down here? Arguing it's an endless pullback. We have a measuring gap, 28 and 34. While it might be a measuring gap, I still think the odds are this is a trading range day. the bears are trying to maintain that gap, and the bulls are hoping. There are different ways to look at it. You can look at it as a wedge. You can look at it, I think it's more consecutive bottoms, but some computers will see it as a wedge. And then it's not quite all the way down to the 13 low. So it makes me think we may go a little bit lower. Usually these double bottoms are perfect, and this is one tick away from perfect. But I think we're in the buy zone. I think if we do get below 13, we probably will only fall a tick or so below it. And we'll probably stay in this range for the rest of the day. So around the 13 low to around the 30 high. And we'll probably end up closing in the middle of the day's range. Here's the middle of the day's range. We're right there right now. Can this go all the way up to last week's or to this week's open? I don't know. I think this is tight enough so that we'll probably go sideways. The sell zone around the 30 high, the 25 high. I still think we're always in long. I'm scalping. I'm buying below things, scaling in lower. And I am not selling yet. I want to see what we get. This is up enough bars. I may wait for the market to go sideways and then sell above. Nobody wants to buy up here, even though we're always in long. And, this happens all the time. You see strength like 7 and 19, and you want to buy, hoping the day will become a trend day, but it's a trading range day, and that means it probably will not be a trend day. And anytime you see strength, up or down, it's usually not the time to enter betting on a trend. It's usually a good time to exit and then wait for a pullback. So a rally here for about 5 bars up to 35. For me, it's too high to buy unless we go sideways for a few bars. And the channel up is strong enough, tight enough, so I'm not willing to sell yet. And if I am selling, I'll sell above bars, like above 30 or above 25. If we go sideways, maybe I'll sell at the stop. But right now, I'm only interested in selling with limit orders. And to buy, I bought and I scalped out. I'm back to flat, and I'll wait to see if we go sideways for a few more bars and then possibly buy again. I'm not opposed to being long. I think we're always in long. But when the market's in a trading range day, I'm usually only looking to buy when it's going down and buying more lower, not buying when it's going up. I don't want to be buying the 7 close. I don't want to be buying the 19 close. And I don't want to be buying the 38 low. Right here, we're buying below things. I don't know. I think we're always in long. Right now, it looks like we probably will not fall below the 13 low, but there's still a lot of time left in the day. And I did not buy the 42 low. I'm going to wait a little bit. I think the upside is probably limited, and we may. I'm still concerned that 34 did not fall below 12. And to me, that increases the chances that we'll, 13, not 12. It increases the chances that we're going to go lower. We're going to get a trap, a break below 34, maybe down to 13 low, maybe a little bit below. Again, we still are only halfway done with the day. The bars are really small. A lot of times I take very few trades around 10 o'clock, 10:30 or so, because a lot of times the market ends up doing this. Bars 2, 3 ticks tall, hard to make even a 1-point scalp. You can see the problem. A lot of the old timers like me know there's something wrong with 34. It did not. It got very close to the 13 support, did not get there. And then the big tail on the top of 34 as well was a warning that something's not right. Now, for the bears, it's a head and shoulders top, left shoulder, head, right shoulder. But it's a trading range day, and I don't want to be selling with a stop below 34. Remember, daily chart, we had an II, and therefore yesterday's both a buy signal bar and a sell signal bar. We broke below yesterday's low, and the bears hoping this is simply a pullback and that we're going to break again below yesterday's low and have a big trend for the rest of the day. Who thinks that is likely? Maybe 20% chance that that'll happen. More likely we're going to stay sideways. We're getting back near to the 34 low and the 13 low, so we're back in the buy zone, but a fairly tight bear channel 49, a little bit of a surprise 49. So, and then also that time of the day between 10 and 11 when the market often has small bars and small legs, and it's really difficult to get probabilities right unless you use wide stops. So it makes it tricky to do anything right here. I'm going to wait a few more bars. Had this gone sideways more and had a bull bar, I might have bought for a scalp, but it did not. We broke to the downside, and we have magnets down here, so we still may go lower. This is enough of a surprise to make me wait to buy, but because today is the trading range day, I don't want to be selling here either, so I have to wait to see if it accelerates down and becomes sell at close, then I'll sell, or if it stabilizes somewhere around here, and then I'll look to buy. Every Head and Shoulders top is a triangle, and there are always three pushes. So there you go. The sell-off after both shoulders and the sell-off after the head. Breakout mode. Breakout mode, 50% chance the first breakout up or down will fail. 50% chance when there is a successful breakout, it'll be up. 50% chance it'll be down. I still think we're always in long, but now we have 8 bars down here. Makes me not want to buy there when we have a magnet a little bit lower, so I'll wait to see if we go sideways a little bit here. We're in the buy zone. If 51 was a bull bar, maybe buy below. I think buying 50 low, 49 low, probably okay. Stop, probably still below the low of the day. For a stop entry buy 51, we have about a 10 bar bear micro channel. So I think that reduces the likelihood that traders will make a profit buying with a stop. And for the bears, it's too low to be selling in a trading range day. We've been down for about 10 bars here since the 40 high. I would only be buying here, but I think it's probably better to buy with limit orders. 49 low, 51 low. And for the bears, they're hoping for an endless pullback and a break below the neckline of the Head and Shoulders bottom. But even if we get the breakout, I think 60% chance there'll be buyers below. For the bears, double top 50, 54. But I would not do the sell. You can see it went 5 ticks above 49. That means the limit order bulls made money. And when that's the case, and you have a trading range day, I don't want to be selling anywhere near the bottom. If we start to break strongly to the downside and become clearly always clearly sell the close, then I'll sell lower. But I'm only interested in buying down here. We're down about 10 bars in a trading range day. Most of the traders will scalp, or scalp at least part. We're getting late in the day. It's possible we can get a trend up or down, more likely up. I think we've stayed always in long all day, despite these 3 bear bars and these 3 bear bars. But I think most bulls are scalping. They buy 51 low, 49 low, and scalp, or buy the 53 high and scalp. Nobody wants to sell down near the low. We're still always in long, and you can see stop entry bulls scalp for 1 point. What about buying 58 low? I would not. You can argue it's a wedge. We have a failed breakout of a double top 50, 54, and a breakout and a failure. So while I think we're still always in long, I don't want to be buying with a stop below a big bear bar after a possible wedge. I'm back to flat. Despite a possible wedge bear flag, I still think we're always in long, and it's a little bit too low for me to be selling. The bears have lower highs. Bulls have higher lows. We're at the apex of a triangle, but I still think the bulls have a slight probability advantage. daily chart, we have a bad sell signal. Chances are buyers below. And today's a Friday, so I always want to pay attention to the weekly chart. And right now we're a little bit below the open of the week, so we have a bear body. But I don't think it matters whether we have a small bear body or a small bull body. It's an inside bar, neutral, and whether it has a small bull body or a small bear body, I think does not matter. I would not buy above 57, probably sellers above, but I'm not willing to take the sell. I think we're still always in long. We're getting near the end of the week, and the bulls still want to get back to the open of the week. I still think we're going to try to get back to the 19 close. It was a reasonable buy the close, and disappointed bears 20 never had a chance to get out around break even. Disappointed bulls bar 20 never had a chance to get out around break even. Odds are we're going to get relatively close to the 19 close before the end of the day. The bears want the double top 42, but the odds are we're going to get very close to the 19 close before the end of the day. And therefore, especially with the day running out of time, I'm not willing to sell above 57 or above 42. I think the odds are we're going higher. Sometimes in the final 3 or 4 bars, it just races up to the target. But right now the odds are, whether or not we get there soon, the odds are we're going to get up there before the end of the day. And that, I think, lowers the probability for shorting. For the bears, a wedge 50, 57, failed breakout 42, but I still think the odds are we're going to get up to the 19 close, and I think that lowers the probability for bears taking this short. Probably buyers below 52. It's about a 10 bar bull micro channel, and we have two important magnets above, the 19 close and the open of the week. So what do? I did not sell the 42 high, did not buy the 62 low. The bears are getting a double top or a low 2, and they're trying to get down to that 12 low. Right now I'm trapped out. I was looking to buy, but this is down too sharp for me to take the buy. So right now I'll have to wait. Boy, tough call. We got double bottom 53. I still think we're always in long, but 63, 64, strong enough down to make me not willing to buy 65 high. So right now I'm trapped out, even though I still think the odds are we're going up to the 19 high. You know, I think theoretically you could buy above 65, put a stop below 65. If you get stopped out and you get a second entry buy, you could buy again. But for me, it's buying too high up in a trading range, so the probability is not all that good. And the risk is relatively big because the signal bar is big. So right now I'm trapped out. Buyers or sellers? I still think we're always in long. I still think the odds are we're going to try to get back to the 19 high. So I think probably buyers at the market, buyers below 67, buyers above 65. But the problem is the math. It's certainly an okay swing, but a lot of traders after 63, 64 want a second entry buy. And we have an II with a bear bar. We did not even trigger the first entry buy above 65. I'm not even talking about the bear case because this has been a support level all day. We broke above whatever, yesterday's low or whatever this low is right here, failed, broke above it, broke above it, broke above it, broke above it, broke above it. So for whatever reason, the market sees this as support and resistance. There was resistance here, and then since bar 6, it's been support, and we're back down to this area again. The reason why I did not buy is because, as I said, the risk was too big. 65 was a big bar, and I don't want to be buying with stops above big bars in a trading range day. And we still have not clearly tested the 13 low. If we get an inside bar on 70 and a bull inside bar, that would be a buy that I would consider. It would be a second entry buy, double bottom of 65, double bottom 53, and it would be another reversal up from the 34.13 low area. And to sell, for the bears, they have head and shoulders top, left shoulder head, and then the right shoulder is a double top. But I did not take the sell. I still think we're always in long, and I still think the 19 close magnet is still pulling on the market. So the bears need a strong downside breakout. Again, we're in the final hour on a Friday, and therefore I look at the weekly chart, and do I see any magnets? On the downside, not really. Are we going to get down to the low of the week? Probably not. In the final hour, we're not going to fall 15 points. The only nearby magnet is the open of the week, which is a little bit above the high of the day, a couple points higher. But right now, it does not look like we'll get there either. So weekly support and resistance might not be a factor. The odds still favor a continued trading range into the close, but you can always get a surprise. You can get a buy the close or sell the close finish. The odds are against it. However, if it happens, I'm not going to sit here and say, well, that shouldn't be happening. If let's say we get to sell the close, I'll sell. Is it sell the close? Now we're right at support. If we get one more bear bar, maybe. Limit order bulls, still buying below everything, below 65, below 34, below 13. We have two legs down. A lot of times on a trading range day, when you print it out at the end of the day, you look at it and say, wait a minute, it was all two-legged moves. One pullback two, one pullback two, one pullback two, one pullback two. It never really looks that way as the day is unfolding, and a lot of times the two-legged moves subdivide, so one pullback two, and then bigger pullback, one pullback two, one pullback two, and then a bigger one pullback two. But that's the nature of trading range days. You often get just a series of two-legged moves, and this is the second leg down from 62. I still think the market is always in long, but it's asking traders to buy above a bear bar after a second bear bar. I would not be selling here, but with the two bear bars, I have to say I'm hesitant to buy with the stop. I thought about buying with a limit order at the 13 low or 34 low, and ended up not taking the buy because of the size of 69. So right now I'm trapped out. Well, technically that's sell the close, but the math I think is not all that good, so I'm going to wait. This is sell the close, but the bars are not all that big. Plus it's starting early. It's starting at 12:15, and when that happens, it usually does not make it all the way to the end of the day. Remember I said that 90% chance we would not go to a new low of the day. Right now, I don't think it's 90%. It's probably 50%, maybe slightly better than 50%. But sometimes you do get a new low in these days, but usually not a big low. So normally the breakout is not, if you get a breakout at the end of the day after an 18 bar range breakout, usually the breakout at the end of the day is not very big. So 18 bar range, breakout at the end of the day just a little bit, and we reversed. 18 bar range, breakout near the end of the day, reversed. Late breakout, did not get far. Tried to break out at the end of the day, did not get there. So the downside risk here is small. Chances are we'll form a bottom around where we are or around the low of the day. That's a good reason not to sell. In fact, I'm looking to buy. I have not bought yet, but I am looking to buy down here. maybe one more trade before the close. Leg 1, leg 2, a little bit below it. The sell to close bears get out one tick above a bull bar, above 74 if it's a bull body. And if it's a bear bar, they'll get out maybe 4 ticks above. And I think, if it's a bull bar, it's a reasonable buy despite the tight channel, but it may end up simply being a 1-point scalp. We're still a little early. Let me rephrase that. I think it's too early for sell to close down here. It's possible it could go at the end of the day, but not likely. More likely, we're going to bounce here or soon. So what do you do? If you're a bear, I think you get out one tick above a bull bar. And if you're a bull, it's a little bit tricky because of how tight this channel is. However, if it closes on its high, it might be an okay scalp. When the channel is tight like this, we might have to go sideways for a few bars. But I would not sell down here. What do the bears do? I think the bears are flat for the rest of the day. So I would not do any more sells. And the question is, what do the bulls do? Obviously we're not going to get to the 19 close, but we may bounce up to the 34 low, the breakout point. And with this tight channel, a lot of bulls are hesitant to buy unless we get a micro double bottom. So not a lot of good choices here. Do the always in bears get short again below 75? I virtually never do that at the end of the day. You got to sell the close finish, and then you get a bull bar 74. I get out of the shorts, and I do not take any more shorts for the rest of the day. What do the bulls do if they bought? Well, I would scalp. I did buy. I bought the close of 73, and I had to stop 1 point, actually about 6 ticks below the one low. And I've already scalped out, and that probably will be my last trade for the day. Once I see 4, 5, or 6 bars in a sell to close sell-off, that probably is not going to last the end of the day. And then I see something wrong with a bar, big tail 73 at support, knowing that even if we get below the low of the day, we probably will only break below it by a bar and by less than a point. I thought probably worth buying for a scalp. One of those days where, in fact, and yesterday as well, where I'm just sitting here picking up 1 point scalps all day. It's a lot of work, after coming back from a vacation. I was hoping to have less work. It's profitable, but it's a lot of work. Weekly chart looks like we're going to have a bear doji bar. Clearly a very strong bull trend for a year and a half now, a very tight channel, but we did not touch the moving average here. And I keep comparing it to 2003 over here. Got close, did not hit it. When it finally hit it, it went sideways for about 10 months in a 10% range. I think that is what our future is, that, we'll get down to the moving average sometime soon, and then we'll stay sideways for a long time. Whenever the market does something that is extreme, like stays above the moving average for 20, 30, 40, 50 bars like this, it usually has a longer rest period, a longer trading range. And here the trading range was, about 40 bars or so. And I think that is what we're going to get here. And the trading range might have started over here. I know we're still in a bull trend, but trends often have transitions And while it's in a bull trend, it can also be in the early stages of a trading range, and it can also be in the early stages of a bear trend. For example, let's say we turn down from here. This would be the high, and traders would say the bear trend began here, which means this is part of the bear trend. So right now we have the early stages of a bear trend, we have a trading range, and we have a bull trend, but we do not have a clear or convincing top yet. And even if we do go down for the next 6 months, we probably will not go down very far. I think this will be the bottom, if we get here. We have a buy climax here, a breakout, pullback, and then a channel up. Not clearly 3 pushes, 1, 2, 3, 4, different ways to count it, but at least 3. And the market usually tries to test down to the bottom of the channel, and that channel usually ends up as a bull leg in the trading range. So a bull leg in a trading range, a test back down, bear leg in a trading range, and then a bounce. And the whole process can take a long time. We took, 5 months or so to get up here, might trade down for several months and then bounce for several months. And this whole thing probably is going to end up being a trading range for the next many months. We do not clearly have a top yet, but it's probably not much above where we are. Daily chart, we keep trying to top. You're always seeing tops in bull channels, especially fairly broad channels like this, but most tops fail. Now we have a lower high major trend reversal, bull trend, pretty good bear breakout for about 10 bars, and then a weak rally. I don't know if we're going to go a little bit higher or if this double top will be the extent of it. We have a double top here, neckline here, measured move down takes us to my target area, the May low or the March low. So I don't know if there's 150 points down, maybe 200 points down, but something like that. And I keep saying that the upside is limited, and it is, but that does not mean we're going down. And we've been sideways here for a couple of months. If you want to say the trading range started here, then we've been sideways for about 4 or 5 months. But not much happening. This is now 3 consecutive doji bars in the middle of a 3-month or 2 or 3 month trading range. No sign of a breakout. The market is in search of a catalyst. It's looking for a reason to break out to the upside or to the downside. I think if it breaks to the upside, the breakout will fail and will end up reversing down. If it breaks to the downside, I think the market will have a hard time falling below this potential final flag. So I don't think there's much downside risk, and I don't think there's much upside risk over the next 3 to 6 months. Today, like yesterday and the day before, we got very useful information early on, right in the first and second bar. We traded below yesterday's low, reversed up, but bad follow through 4 or 5. Although it's a possible low of the day, we might go outside up. Yesterday's a small day. I don't know that we'll get all the way up there. We may fail to get up there. We have an obvious magnet at the open of the week, and we tried to get there, but could not get there. And is this the second leg up? Sure. 1, pullback 2. It's also a wedge, 1, 2, 3. And we have first leg here, pullback, second leg up here. So this is a second leg trap, 1, pullback 2. And this is a bigger second leg trap, 1, pullback 2. Whenever I see a big bull breakout that does not break far above the bars to the left, I assume that it's probably a buy vacuum test of resistance at the top of the range. And I just don't want to buy high. I want to buy after the market sells off 10 bars or so. I want to sell after it rallies 10 bars or so. And I prefer to enter with limit orders, looking to buy with below bars and selling above bars. And I want to buy in the lower half of things, and I want to sell in the upper half of things. And I want to take quick profits because I think the odds of the market going very far are small. So I want to scalp. I thought bar 8 was interesting. I said that, it's not a strong breakout, and 8's a fail breakout, and it's a possible high of the day, opening reversal down from the 60-minute moving average. But it's an 8-bar bull microchannel. Why? have bulls been so eager to buy that the market cannot fall below the low of the prior bar. And that tells me that the bulls are strong. It's a subtle form of strength, but it's enough to make me think, even though 8 closes on its low, and it could be an opening reversal down from the 60-minute moving average and a wedge, probably buyers below. But the number of bear bars and that bear sell signal bar on 8, we could get a deep pullback down to the 6 low, maybe even down to the low of the day. High 1, bar 9, but 2 bear bars, probably sellers above. High 2, 11, but a doji bar and 4 bars down. I think it's an okay buy, but stop below 1. And then 13 is a slightly higher stop entry buy because it's now a wedge. A third attempt by the bears to get below the 6 low failed, so we're probably going up for a second leg after 6, 7, especially since there are magnets above. However, I did not buy above 13. I was buying with limit orders below bars and scalping. And then 19, we see this all the time. A great looking bull bar, the best looking bull bar of the day, but it's testing resistance. Yesterday's close, yesterday's high, and it's possibly a second leg up. First leg 7, second leg 19. I don't want to be buying high on a trading range day, and I don't care if it's a good looking bull bar and it might be a successful breakout. It probably will not. So I'm not going to buy up there. And then we get that bad follow through bar 20, and it increased the chances of a second leg trap. Even if it was going to become a second leg trap, I still think the odds are we're going to hold above the low of the day. We broke far above the 18th bar of the day. And when that happens, only a 10% chance we'll get down to the low of the day. And we got close to it on bar 73 and bar 34, but could not get there. And because of that, even if we do sell off below 20, we're probably going to get a higher low. So I'm going to be looking to buy below things. 23, a double bottom 18, a high 1 buy, but 3 consecutive bear bars, probably sellers above, even with that good looking bull bar. So I think we'll probably go sideways to down more. 28, a high 2 buy, double bottom 18, but still 1 tick down to the 18 low. We may have to get all the way down to the 12 low. And then 34, I looked at it as a consecutive bottoms pattern. You can call it a wedge, 23, 27. For me, it's a consecutive bottom. We tried to get a complex bottom, a high 2 at 28. Then we get a bear breakout, 31, and then a second leg down, 33. And then another bottom attempt, 34. So it's a type of high 4 with 23, 28, 32, and 34. But I think of it more as a second attempt to bottom. It tried to bottom 18 and failed. Now it's trying to bottom again. Usually it'll be a profitable trade even with the tail on the top of 34. But again, I'm buying with limit orders at the market, below bars or on closes. 39, a high 1 buy, but a possible double top. 38, too high up and a trading range for me to be buying. I did not place a limit order to sell the 38 high. I thought we might get a higher low and go sideways, but instead we got about 7 or 8 bars down to 49. And on 53, now we have either a double bottom 49 or a wedge 43, 49, and a double bottom 34. Now we have a triangle, 34 above 13, 53 above 34, and we have a lower high 43. Decent bull bar 53, but I'm still only scalping. I think it's an okay stop entry buy, but I'd rather be buying with a limit order below 51 or 49. And then we have a failed breakout above 42, bar 62, a failed breakout of 42. We have a wedge, 54, 57, but it's a 10-bar bull microchannel and a doji sell signal bar, so I'm not going to be selling with a stop there. Surprise breakout, 64, 63, 64, probably a second leg down, so I'm not going to buy above 65. And then another surprise, 69, 70, and then 71, a follow-through bar. I think it's sell the close, but I don't think we're going to go down very far. It's starting too early. It's starting at 12:15, and when that is the case, it usually does not last until the end of the day. Usually it lasts 4, 5, or 6 bars, and then you get a reversal. And that means around 4, 5, or 6 bars, I'm going to look for a reason to buy. And you can call it a parabolic wedge, 65, 70. You can call it a small second leg down, 70, 71, 3, but that big tail on 73, the break below obvious important support 13, probably the breakout's going to fail, so I'm looking to buy here. And we got a little bounce at the end of the day. For stop entries today, 2 is a possible low of the day. It's a higher probability to wait to see if we get a second reversal up, and you can argue going above 5 was the second reversal up, similar to yesterday. Going below 3 was the second reversal down, but I always prefer the second entry when you're buying at the low of the day. I always prefer it to come from a lower low instead of a higher low. Anyway, so 2 possible stop entry buy. 8, you can take it as a second entry, as a opening reversal from the 60-minute moving average and a second leg trap. But I thought the odds were buyers below, so I would not sell below 8. The next stop entry I would consider would be 13, maybe 11 if you used a wide stop. And then 20, if you want, you could take a chance on a second leg trap, but I did not. 23, I did not buy with a stop after 3 bear bars, big up, big down, probably going sideways. And then selling below 24, 25, I would not. Selling below, buying above 28, a high 2 buy. I think if you're doing it, you get your stop below the low of the day. Fairly tight channel. I think probably the best the bulls get after 28 is sideways or a few bars, so I'm not eager to buy. And 34, 35, I think a higher probability buy, but we still might have to fall below 13, which we did at the end of the day. And then the next stop entry trade I would consider would be buying above 53 for a scalp, and then selling below 61 or 62, I did not do it. Selling below 67, I would not do it. Buying above 65, I would not do it. Buying above 74 is an interesting trade because you know the sell the closed bears are going to get out. Even though it's only a 1-tick bull doji, the bears are going to get out. On a trading range day, they don't want to see it come back above a bull bar, especially since the sell-off 71, 72, 73 is not strong. And we have a magnet middle of the day, middle of a trading range day. So I would get out. Buy the close, sell the close. Well, 6 is probably buy the close, and then sell the close, maybe 22 after 3 bars down. And then beyond that, gosh, it's really tough. When I see a trading range day, I'm thinking that I want to do the exact opposite of what I do on a trend day. And if I start seeing strong bull bars near the top of anything, I start thinking about selling closes, not buying closes, like 18, 19, or 19. There's zero chance that I'm going to buy that close. I did not sell it, although sometimes I do take that sell. A lot of times I would wait for 20 and then sell. But there's no way I'm going to be buying strong bull closes at the top. Bar 31, 49, 64, 70. There's no way I'm going to be selling bear bars, fairly below, fairly low down in the leg. If anything, I'm doing the opposite. If I'm not buying the bear closes and selling the bull closes, I'm getting ready to take the trade. So when I start to see big bear bars near the bottom, I'm starting to look to buy. When I start to see big bull bars near the top, I'm starting to look to sell. Limit orders. I think it was really interesting. I think it was limit order trading all day. It's interesting that the buy the close bulls 19 never got a chance to get out. I think, let me just check one thing here. So let's say you buy the 19 close or the 20 low. Let's say you buy the 19 close. Then you wait for a pretty good bull bar that's at least 2 or 3 points down and you buy above it. So then that means you buy above 53. And at that point you decide, okay, am I going to hold, trying to get out break even on my first entry, 19 close, and then with a profit on my lower entry? Or instead, will I be so disappointed about all of this selling that I'll simply be happy to get out break even on the trade at the midpoint of my 2 entries? Here's my first buy. My second buy is just above 53. And you can see what happened. And went a tick or so above the average entry price for the buy the close bulls, and it sold off. And that tells you that a lot of the bulls who bought the 19 close gave up. They decided it was not going to get to the 19 close. Instead of looking for a profit on their trade, they were simply trying to get out break even. And that's probably a big component of why the market reversed down on 62. Big picture, we're in the middle of a 3-month trading range, no sign of a top. Every few days we'll get a trend day. We're probably due for a trend day after 3 doji days. So maybe it'll be a trend day on Monday. I'm still bearish over the next several months. I think the upside's limited. The market's looking for a catalyst. We have 3 central banks making interest rate decisions over the next couple of weeks, and that increases the chances of a big surprise. The market, I don't think we'll get surprised to the upside. I think because the market is so overdone, so overbought, if there's a surprise, it'll result in a sell-off, maybe 5 to 10% down. But we have an increased chance of a sell-off. And, again, I pay a lot of attention to the open, and if it looks like this, I'm going to be scalping until it clearly becomes a trend day. I'm going to assume that these first few bars are telling me the day is going to remain a trading range day. Okay, question, when do you expect a second leg after 3 bars up or 3 bars down? In general, if we get a reversal after a breakout like this, where there should be buyers and a second leg up, instead we get 3 bars down, the odds are the buy the closed bulls 19 are really upset and they're desperate to get out, and they'll use any little bounce to get out with a smaller loss, and that means that they'll sell. And the bears who did not take the original sell, after they see 3 bars down, believe that there'll be a second leg down as well, so they'll sell the first little rally, and they too will contribute to a second leg down. And the opposite is true at bottoms. If you get a reversal that has 3 bars up, usually you're going to get at least a little bit more up. So like down here. Can you show us your 1-point scalps from today? I don't even remember. I don't like, one of the reasons why I don't like to do it is because it feels like a lot of work to try to remember all of them. And if I say anything wrong, I don't want the NFA to say, Al, you said you bought below this bar or sold above that bar. And, I ended up not taking a trade or entering a different way. So, I prefer just to simply say what I'm doing at the time. So, you can hear me say, I'm looking to buy, or I'm looking to buy below bars, or I'm looking to sell, or I'm looking to sell above bars, or I'm not looking to sell, or I'm not looking to buy. So I know that's a little frustrating on the 1-point scalps. At some point when my life settles down, I'll probably start, well, I want to start doing some swing trades in the room. But as far as scalp trades in the room go, I don't want to talk about them as I'm taking them, because traders will try to piggyback, and a lot of times I'll make decisions with just a second or on the spur of the moment, in a second or two, and I'll suddenly get out. And then I'll say, okay, I just got out. And then by the time you're able to get out, it's 2 ticks worse and you get a loss. So, it's just really too easy for me to mess people up and cause them to lose money. So I'd rather say that, we're in the buy zone, I'm looking to buy. We're in the sell zone, I don't want to be buying up here. So I'd rather do that. But the kinds of things that I was talking about are the kinds of things that I try to do all day long. So I'm trying to buy below bars in here, buying below bars here, buying below bars here. Sell the close, not very strong, I'm looking to buy. And 3 bear bars, I'm looking to sell. I did not do anything in here. The bars were 2, 3 ticks tall, did nothing in there. A lot of times on the initial breakout, I'll buy at the market, for a scalp. So, okay, question, what were the best trades for, I can't read the word. Okay, maybe it's what were the best trades for 1 contract traders today? Well, there are a whole bunch, I think it's a little bit more difficult for scalping if your account is relatively small. I think it's really hard to make money as a scalper in general. I think it's especially hard to make money as a scalper if you cannot increase your chances of success, and that means if you cannot scale in and use wide stops. And if you're a one contract trader, you cannot do that. So that means you got to be looking for trades that are bigger than 1 point. And what were the reasonable ones? Maybe buying above bar 2, right? I would not sell below 20. I mean, it's turned out to be okay. Three reversals down, 1, 2, 3. I'd rather wait to sell after I see 22. But for me, a bull bar closing on its high, 23, is not really a good trade for a beginner. And then a limit order short in general is not a very good trade for a beginner. If I were trading as a beginner with just one contract, what would I have done? I probably would have bought above 13. I probably would have bought above 35. I would have bought above 53. And buying above 74, I think, is tricky, but I think the math was good. When you have small trading range days, it's going to be mostly scalping. You can say, well, Al, if I bought above 2 and sold below 20, I would have made 4 points up, and I would have made, who knows, at least 2 or 3 points down to here. And that's true, but I think those trades are not particularly good. I think the math is not all that good. What do you suggest people do with their investment funds that they're not using for day trading? I think, just listen to Warren Buffett. Betting on America is the smartest thing anybody can do. So if you're a young person, let's say a 30-year-old guy, and you happen to have 100,000, 200,000, what I would do is I would just buy stock in great companies. Since the market is so overbought now, I probably would dollar cost average, buy some, maybe a quarter of it now, and then wait a month or two, buy another 25%, wait another month or two, another 25%, and plan to hold indefinitely and forever. I remember when I was doing eye surgery 30 years ago, I had this old woman who was a patient. She was 90 years old. She took me out to dinner one time to the LA Country Club, which is, it was really nice of her to do that. And, she and I talked about her investments. And, I don't know that she ever worked a day in her life. She inherited, when her husband died like 20 or 30 years earlier, she inherited money. And she just, it was all in stock. And she said, Dr. Leverrier, my name was Leverrier at the time, I changed it to Brooks because it was impossible. Anyway, so let's say Dr. Brooks, what I do with my money is I just buy really good companies, and I'm never going to sell them. I just buy and I hold. I buy and I hold. And I think, if you're a young person, 30 or 40 years old, it's probably the single best form of passive investment. You can obviously diversify into other things like real estate. That's an obvious one. However, if you're not going to be actively trading, getting in and out, and you're just looking for some way to park your money and get a reasonable return, I personally think the single best thing to do is buy high quality stocks that will be good companies 5, 10 years from now. Is Amazon going to be a crummy company in 5 years? No. Is Apple going to be a crummy company in 5 years? No. What about Google? No. Right? And what about, just pick any reason, JP Morgan, is that going to fall apart? No. ExxonMobil, even with the terrible energy situation and everyone going to alternative energy, ExxonMobil is probably not going to fall apart. Biotech, Pfizer, Merck, are they going to die? No. So I would just pick, a handful of stocks, 10 stocks, and that I think are solid and will be around. Lockheed Martin, that's not going to die. We're always going to need defense. Boeing Airlines, is that going to go bust? No, they have orders out for like 5 or 10 years from now, so they get a steady cash flow for the next 10 years. So if I were a 30-year-old or a 40-year-old and I had some cash, $100,000, $1 million, $5 million, I would just sprinkle it around into really good companies and then just sit tight, knowing that even during the Great Depression, 1929, and the crash of 87, the market now is much, much higher than it was at the time of the crash. And at the time of the crash, it looked like everyone was going to lose everything that they had. And in fact, it's just the opposite. You know, Warren Buffett says that when everybody is greedy, you should be fearful. When everyone is fearful, you should get greedy. He's looking to buy crashes, right? And I think, you know, if I were in a situation where I had a lot of cash and I was, 30 years younger than I am now, and I didn't want to actively invest it, like I didn't want to buy a franchise and be in there all the time working it. I just wanted a passive investment. I would just buy really good quality companies. I have a bunch of friends who've worked hard and they have pretty good money, and a lot of them have pretty decent portfolios at this point. And every time the market starts to fall down, like in 2014, 2015, when it falls 15, 20%, they say, "Al, I'm nervous, but I'm not going to sell." And I mean, that's what investors do. Is, if they have good quality stocks, they know that they're not going to go bankrupt. And if they have 10 companies, and even if one goes bankrupt, even if they happen to buy, Shearson Lehman or something, the others will not, and they'll do very well over time. An alternative, you could always buy mutual funds. I personally have not had money in mutual funds in probably 20 or 30 years, but long ago I used to do that. And I don't know. The reporting of mutual funds is really, I think, misleading, and that's part of the reason why so many people are avoiding mutual funds now, and they instead just buy ETFs. If they want to buy a financial, instead of buying JP Morgan or Goldman Sachs, they'll just buy the XLF, just so that they're buying a basket of stocks, and I think that is reasonable as well. However, I think it's better if your portfolio is big enough to buy individual stocks, because when you buy ETFs, there are little fees, just like with mutual funds, that eat away at the profit potential. So if you're going to be holding for a year or two or three, those little fees take a reasonable chunk out of your return. An alternative is, if you're buying stocks and you get a big run up, you can also sell calls, upside calls, to generate extra income. And, selling covered calls, I think that is another reasonable thing to do, but it requires more effort. A really good covered call trader can add 5 or 10% return to his portfolio every year by picking his spots for selling the calls. Selling during big buy climaxes, expecting that the market's not going to go up much further. All right, I'm losing my voice. Probably tomorrow will be the same, or probably Monday will be the same as today. But I think sometime in September, we're probably going to get a big move. If the big move is up, I think it'll fail and reverse down. If it's down, I think we'll probably try to work down to the March lows. Okay, hope everybody has a good weekend.